Good evening, ladies and gentlemen. My name is Hong Wei, and I will be your host for tonight. I would like to first thank all of you for taking the time off to attend this webinar. Here is the agenda for today. Before we start, please do pause here and take some time to read through the important notes and disclaimer. Do note investment always involve risk and the possibility of losses. Any reference to prediction, projection, forecast on the economy, stock market, bond market, or the economic trends of the markets or past performances is not necessarily indicative of and is no guarantee to the future or likely performance of your investments. Tonight, we have two speakers, Tai Zhi and Jalisa. Tai Zhi is the co-founder and chief investment officer of AutoWealth. He has more than 15 years of industry experience in sovereign wealth fund, hedge funds, and fintech. Notably, Tai Zhi also holds the position as the chairman of SAFRA Investment Committee and is a board member of NUS Alumni Advisory Board. Jalisa is the investment analyst and wealth manager at AutoWealth. She joined AutoWealth upon graduation from Nanyang Technological University and has over 2 years of experiences in advisory services. I will now be passing the time over to Jalisa, who will be presenting the first segment of this webinar. Jalisa, please.
Okay. Good evening, everyone, and thank you for attending this webinar. I'm Jalisa, Wealth Manager at AutoWealth. I'm here today to share more about the Supplementary Retirement Scheme, SRS in short, and how we can utilize SRS to maximize our tax savings and minimize tax payables. So without further ado, let me introduce what SRS is about. Okay. Now, SRS is a voluntary saving scheme that allows you to grow your retirement fund on top of your CPF savings, implemented by the government to encourage individuals to save for retirement on top of their existing CPF savings. Singaporeans, PRs, and foreigners above the age of 18 are eligible to start an SRS with one of the three SRS operators, DBS, UOB, or OCBC, to grow their retirement funds. So you might wonder what are some of the key benefits of opening an SRS account. Now, the first key benefit is tax savings. So for every dollar contributed to the SRS account, you can reduce your taxable income by the same amount. So for example, if I contribute $10,000 today, I'll be able to reduce my taxable income by $10,000 in the following year of assessment. But there's a yearly maximum contribution cap to be aware of. So for Singaporeans and PRs, the maximum SRS contribution for the year is $15,300. And for foreigners, the yearly cap is set at $35,700. So you might have noticed that foreigners have a higher contribution cap. And this is in recognition of the fact that they have no access to the tax benefits offered by the CPF scheme. Secondly, you can invest these funds in eligible investment vehicles offered by your SRS operators to maximize your SRS growth. So invest the funds and do not let it sit inside your SRS account, as idle funds earn an interest rate of 0.05% per annum only. Lastly, investment returns are tax-free before withdrawal, and only 50% of the withdrawals from SRS are taxable at retirement. Next, I will illustrate how active the SRS scheme is in terms of tax savings. Okay, so meet our very cute AutoWealth mascot here, which is BB Pro, who will show us the power of SRS in slashing taxes. For context, BB Pro is a 33-year-old Singaporean earning $60,000 annually, and he is only eligible for the CPF relief. So without SRS, BB Pro chargeable income is $48,000, and he will need to pay a total of $1,110 in taxes each year. But when he decides to contribute 50% of the max SRS amount, $7,650, his chargeable income drops to $40,350, and his tax payable shrinks to $574.50. So that's a tax savings of $535.50, which is about 48.2%. Now, if he goes all in with 100% SRS contribution, which is 15,300, his chargeable income drops to $32,700. And he ends up paying just $294.50 in taxes. So that's a $815 tax. As you can see, contributing to SRS can bring you significant tax savings. Now, we have a graph that shows the tax payables for the three scenarios: no SRS, 50%, and 100% contribution across different income levels. So from the graph, we can conclude that anyone with an annual income above 50,000 will achieve significant tax savings through SRS contributions. If we categorize the same graph into three different income groups: low, middle, middle income, and high income, we can see some interesting insights. The low middle income and middle income groups enjoy a significant greater reduction in tax payables in percentage terms. So debunking the myth that SRS is only for high income earners. For example, with max contribution, members in the low middle income group can see their tax payables slashed by up to 73%. So similarly, for the middle income group, members can see a notable reduction in tax payables by up to 28%. Okay, however, it is not necessary to max out contributions every year. So members can also opt to contribute smaller amounts to help offset some of their taxes while building their retirement nest. So for example, with a 50% contribution, members in the low middle income group can still have a significant tax reduction of up to 48%. So reducing your income tax is always a benefit regardless of your tax income. Yes, so and of course the tax relief would benefit our high income earners as well. So you can see from the graph, which shows the tax savings across different income levels, the higher the income, the greater the dollar savings you can achieve with SRS. And a little goes a long way. So if BB Pro maximizes his SRS contribution every year, he will have earned an additional $24,465 from tax savings after 30 years. So don't underestimate the tax savings you can achieve from SRS contributions. Now, last but not least, here are some additional considerations when using SRS. First, the total personal income tax relief is $80,000 for each year of assessment. So if you qualify for other reliefs, please keep this in mind. Next, SRS investments are for the long term. So to make the most out of your SRS investments, you will need to stay invested until the statutory retirement age, which is currently 63, and at least 10 years for foreigners because early withdrawals are subjected to penalties. So consider your short-term financial commitments and ensure you have sufficient liquidity before contributing to your SRS. Lastly, tax calculators from IRAS and DBS are useful if you want to estimate your tax savings. Now, we will share how to navigate SRS withdrawals and review the secrets to withdrawing your SRS funds most effectively. Okay. First, there are several scenarios that you can withdraw from your SRS account without penalty. So you can withdraw from your SRS account without penalty on or after the statutory retirement age. And this age is based on the prevailing statutory retirement age at the time of your first contribution. So if you were to open an SRS account and make your first contribution today, your penalty-free withdrawal age would be the current statutory retirement age, 63 years old. Any subsequent change in the statutory retirement age would not affect you. Withdrawals on medical grounds, upon death, or in the event of bankruptcy are also penalty-free. And lastly, foreigners who withdraw in one lump sum after holding the account for at least 10 years can enjoy penalty-free withdrawals. Okay. And for foreigners, we understand that navigating SRS withdrawals may be confusing. So good news is that we'll be releasing an SRS foreigners guide soon, which will be made exclusively available to AutoWealth clients. Now, however, if you do need the funds for emergency, you still have the flexibility to withdraw from your SRS account before the statutory retirement age. But be aware that this would be considered a premature withdrawal, making the withdrawal amount 100% taxable and subject to a 5% penalty fee. Okay. Now, next thing to note is that SRS has a maximum withdrawal period of 10 years. So the 10-year countdown begins from the date of your first penalty-free withdrawal. If you make your first withdrawal on 1st April 2024, your withdrawal period will end on 31st March 2034. Once you start withdrawing funds from your SRS account, you can no longer contribute to your SRS account. So if you want to keep contributing to your SRS account, you can delay your withdrawal. And during this 10-year period, you have the flexibility to withdraw funds at any time and in any amount. Okay. Lastly, you can enjoy a 50% tax concession on all withdrawals made at or after reaching the statutory retirement age. So for example, if BB Pro were to diligently contribute the maximum amount each year to his SRS account, his contributions would hit 459,000 by the time he hits 63 years old. So if he decides to withdraw 10% of that, which is $45,900, 50% of this sum will be exempt from tax, and then the remaining 50% will be taxed according to his personal income tax rate. So how much tax does BB Pro needs to pay when he withdraws $45,900 at 63 years old? Okay, here's a quick breakdown of how the tax payable is computed. Since only 50% of the withdrawn amount is subject to tax, the chargeable income would be half of $45,900, which equals to $22,950. Based on the income tax table, he does not need to pay tax on the first $20,000, and then the remaining $2,950 would be taxed at 2%, amounting to $59. So now that we understand the mechanics of SRS withdrawals, I will review 3 key strategies to withdraw your SRS funds most effectively. So let's dive into our first key strategy, which is to maximize the 40,000 tax-free withdrawal per year. Okay, as we discussed earlier, the first 20,000 of the chargeable income is tax-free according to the income tax table. And since only 50% of the withdrawn amount is taxable, SRS members can effectively withdraw $40,000 annually without paying any tax. So over the 10-year withdrawal period, this strategy allows members to withdraw up to $400,000 completely tax-free, assuming they have no other sources of taxable income. So this strategy is very ideal for those who have up to $400,000 in their SRS account. Okay, the next key strategy is to spread out your withdrawals evenly over the 10-year period. Okay, imagine that BB Pro has accumulated a massive $550,000 in his SRS account. If he goes for a lump sum withdrawal, he will face an astonishing $35,575 in taxes. On the other hand, if he chooses to spread his withdrawals and take out $55,000 per year instead, he will only pay $150 in taxes each year. So that is just $1,500 in total over the 10 years. So for anyone with more than $400,000 in their SRS account, can spread out your withdrawals to minimize tax payables. Okay, but there's a way to actually reduce the $1,500 tax payables. So we will now review our third key strategy. The third key strategy leverages on the power of life annuities. According to IRA's website, the 10-year withdrawal period does not apply to investments in life annuities. This means that SRS members who purchase life annuities get to receive their annuity payments as long as they live, and these payments are eligible for the 50% tax concession. For members who have accumulated significantly more than $400,000 in your SRS account, this is what you can do. You can first set aside $400,000 for tax-free withdrawals. The remaining funds can be used to purchase life annuities before the SRS account is deemed closed at the end of the 10-year withdrawal period. This way, you can reduce your tax payables and enjoy a steady stream of income during your retirement years. I would also like to highlight that most policies have an accumulation period of at least 5 years before payout commence. So when deciding when to pivot to an annuity plan, consider the plan's accumulation period and your preferred payout age. You may want to consult your AutoWealth wealth manager or an insurance professional if necessary. Here's an example. So imagine BB Pro has accumulated 550,000 in his SRS account. This time, he will be withdrawing $40,000 tax-free annually over the 10-year withdrawal period. At 63 years old, he invests the remaining 150,000 in a life annuity plan. From the plan, BB Pro can receive a monthly payout of $1,250, which adds up to $15,000 annually. Because the annual payout is below $20,000, he does not have to pay tax on these annuity payments. Essentially, by strategically utilizing life annuities, he can maximize his SRS withdrawals while minimizing tax payments. So here is a summary of the 3 withdrawals strategies shared earlier. Now I'll pass the time to Tai Zhi, who will share more on what you can do with your SRS funds.
Hi, thank you everyone for taking time to join us this evening. This is Tai Zhi, co-founder and CIO of AutoWealth. I'll be bringing you through how to grow your wealth and retirement nest using our AutoWealth SRS portfolios. But first, let me share with you why it is important to invest your SRS money early. According to SRS statistics, there are 116,466 SRS accounts with a total contribution of 5.97 billion Singapore dollars. Yet there is about $1.91 billion left in the SRS account as cash. Many SRS users are not maximizing their SRS funds. Here are 3 reasons why you should invest your SRS funds. Other than being able to reduce your taxable income and thereby reducing your overall taxes, as Jalissa has reiterated multiple times earlier, you may want to know that the gains on your SRS investments are also tax-free. The second obvious reason behind investing your SRS funds is to protect your money from losing its purchasing power due to inflation. Currently, Singapore's inflation is 3.1% as at May 2024, which means that you are not only losing purchasing power of your hard-earned savings, but also losing at a rate that is much faster than the US as a reference point. Therefore, you should invest your SRS funds to achieve an investment return that is higher and overcome the rate of inflation. The third reason is that by leaving your funds in your SRS account and not investing them, the savings only earns a miserable 0.05% interest per annum. Therefore, by investing your SRS funds, you can potentially earn much higher returns and also grow your wealth and retirement nest much faster and better. Here's an illustration to compare what happens when you do not invest your SRS funds and leave them in the SRS bank account, vis-a-vis investing them through our most popular AutoWealth long-term growth portfolio, which is risk level 4. Peter, in this case, 33 years old, chooses to contribute $15,300 a year, which is the maximum, into his SRS account, or a total of $459,000 over a period of 30 years. Now, Peter is unsure how to invest his funds, right? And therefore, he decides to choose the easy way out, leaving his SRS funds in the bank account, which earns him that miserable 0.05% interest per annum. At the end of this 30-year period, Peter reaches his statutory retirement age and finds that his SRS bank account balance has now grown to $462,300 plus, a return of slightly $3,000 slightly above $3,000 over a period of 30 years. On the other hand, our AutoWealth mascot, BB Pro, also contributes the same maximum $15,300 a year into the SRS account and a total of $459,000 over a period of 30 years. But BB Pro invests his SRS funds into the popular risk-for AutoWealth long-term growth portfolio. Over time, the difference is that BB Pro now sees the SRS investment value grew to a whopping 2.4 million. BB Pro end up having almost 2 million more than Peter at the statutory age of 63 years old. BB Pro can now splurge on anything it likes, buying, whether it's to buy a new iPhone that hits the market every time, travel the world without breaking a sweat over finances, or living that luxury retirement lifestyle. Peter, on the other hand, retires with a decent sum, but is constantly confronted with a dilemma between needs and wants due to limited finances. This huge difference is due to the effects of compounding returns, where BB Pro makes an intelligent decision to invest its SRS funds at a higher return. What is so important about compounding returns is that it allows you to earn returns on previously accumulated returns. And therefore, the effects are increasingly pronounced when you start early and have a very long time horizon. The illustration above is based on a 10-year back-tested return of our risk-for AutoWealth long-term growth portfolio. I will share another reference point. Our first SRS portfolio, which is the risk-5 aggressive growth portfolio, it has generated 18.3% returns over the last 7 months since it was started in December last year. The 10-year back-tested return for this risk level 5 portfolio is 12.6% per annum. Whilst I will remind everyone on our disclaimer shown at the start of this webinar that past performance is no guarantee of future or likely performance, I do want to share these reference points to illustrate how investing your SRS funds through AutoWealth can help you overcome inflation and grow your wealth so that you achieve your precious financial goals like a comfortable retirement, that dream house, your children's expensive education that will only become even more expensive in future. Now, other than investing your funds through AutoWealth, there are also other investment options. You can invest your SRS funds by buying selected stocks, selected ETFs, selected mutual funds, bonds, and many other options seen here. You will notice that many of the options included the word selected. This is because not all stocks, REITs, ETFs are SRS approved. You can only invest your SRS funds on SRS approved investment options. If you have strong investment knowledge and you have sufficient time to monitor markets and navigate your SRS investments, these options may be suitable. If you do not have strong investment knowledge or the time to actively manage your SRS investments, you may be better off investing your SRS funds in professionally managed solutions like our AutoWealth SRS portfolios. Now, in the next segment, I will introduce what portfolios AutoWealth can offer to help you achieve good investment returns while having risk managed. Our SRS investments include 5 portfolios tailored to investors with different risk levels from low to moderately high. All portfolios went through rigorous portfolio construction process, from an investment strategy design to asset allocation, selection of funds, financial modeling, backtesting, performance, and risk analysis. Diversification is achieved through a multi-asset structure across stocks and bonds and across geographical regions. Real-time portfolio rebalancing is a common feature across all portfolios. Every day, each portfolio is analyzed through our algorithms to identify deviations from the target asset allocation weights. Whenever the portfolio drift is more than 3%, your SRS portfolio will be rebalanced back to the target asset allocation weights to prevent over-concentration risks and to maintain a consistent risk profile. Now, this rebalancing process also exploits excessive market volatility to sell high and buy low, thereby locking in extra returns for you. Professional wealth managers are assigned to every client account to guide you from examining your financial situation, appreciating your investment objectives and risk profile, recommending suitable investment solutions, monitoring for you your investment portfolios, and tracking your progress towards your precious financial goals. Therefore, at a very reasonable cost, we help you to grow your wealth intelligently and hassle-free, whilst you focus your time on what matters most to you, your work and your family. Here's a closer look at our AutoWealth SRS portfolios. Each of the 5 portfolios have varying asset allocation towards stocks vis-a-vis bonds. Risk level 1, for example, the preservation portfolio, has the lowest risk, whilst at risk level 5, the aggressive growth portfolio, that is the highest risk rating. Our most popular portfolio, which has most investors investing in, that is our risk level 4 long-term growth portfolio. Its 10-year back-tested annualized returns is 9.8% per annum, and it has a maximum drawdown of negative 23.59%. Maximum drawdown is an indicator of downside risk. It refers to the maximum decline in portfolio value from peak to bottom over a historical time period. The risk level 5 aggressive growth portfolio has a 10-year back-tested annualized returns of 12.6% per annum and a maximum decline of 28.55%. Our first client portfolio was this particular one, and it has generated 18.3% returns over the last 7 months since it was started December last year. Now, the minimum investment amount for our SRS portfolios is $3,000. This amount ensures there's sufficient investment in each portfolio constituents to create a robust diversification across asset classes and across geographical regions. We charge a portfolio advisory fee of 0.4% per year. This fee is prorated and deducted at the end of each calendar quarter based on the daily prevailing portfolio value across the calendar quarter. For new clients who do not have any AutoWealth starter portfolio with us, we also charge a flat platform fee of USD $18 per year. We believe our fees are reasonably low relative to the value that we can bring to you, including good investment returns, active risk management, a human wealth manager to guide you along your financial journey, and saving you precious time for what matters more to you in life. I will now bring you through the 3 simple steps to get started. First, you need to have an SRS bank account with any of the 3 local banks, DBS, OCBC, or UOB. Take note that you can only have one SRS bank account, i.e. to say, you cannot open another SRS bank account with UOB if you already have an existing one with DBS. Second, you need to start an AutoWealth account by visiting our website or downloading our mobile app, whichever you prefer. If you're already an AutoWealth user, simply log in and select Add a SRS portfolio, and then follow through the questionnaire that pops up. Lastly, select your SRS portfolio and fund it by indicating the amount that you would like to start with and regular investment top-ups, if any. Many of our clients set up regular investment top-ups, which many of you also known as dollar cost averaging. This is a disciplined way to save and invest and take advantage of market discounts to enhance investment performance. Now I will show you some screenshots. This image shows an example of step 1, where you can navigate and open an SRS bank account on the OCBC website. Obviously, you could do the same with DBS or UOB. This next image shows you step 2, creating an SRS investment account at AutoWealth and then linking your SRS bank account to AutoWealth. For existing clients, you can log in the AutoWealth app using your SingPass and select Set up New Portfolio SRS. Then simply follow the steps on screen to fill up the particulars required and set up your SRS portfolio. When filling in your particulars, you will be required to indicate your SRS bank account number so that we can link it to your AutoWealth account. Once your SRS investment account has been fully set up, typically a business day or two, we will notify you via email and guide you how to fund your SRS portfolio. If you are a new client and this is the very first time you start an account with AutoWealth, please select SRS portfolio at the account opening stage, and the rest of the process is pretty similar and intuitive. The last screenshot I want to show you is step 3, funding your SRS portfolio. Once you are logged into the AutoWealth account, all you need to do is to locate the SRS portfolio that you have created previously, and then click on Fund Portfolio here. Indicate the amount that you would like to start and set up regular investment top-ups if you wish. Upon submitting the funding instructions, the portfolio will be constructed over the next few market days. That brings us to the key takeaways of tonight's webinar. Firstly, start contributing to SRS to maximize your tax savings. Every $1 contributed reduces your taxable income by the same amount. Secondly, invest your SRS funds to achieve higher returns. Do not leave your SRS funds idling, which earns you a miserable interest and can't even fight inflation. Thirdly, start early, tonight or this weekend. Compound your investments early and for as long as possible, starting at 32 years old with the maximum, starting at 33 years old and with a maximum of $15,300 contribution can accumulate you millions by the time you reach statutory retirement age. Lastly, finish strong. Strategize your SRS withdrawals to maximize your tax savings. I will now pass the mic back to Hong Wei, who will host the Ask Me Anything Q&A segment.
Thank you, Tai Zhi. We will now begin the Ask Me Anything Q&A segment. But before we start, we want to thank you for staying until the end and, in Tai Zhi's word, inspire you to start early, start now, and finish strong. On screen, you will see an exclusive promo code valid from today until 9th August, our Singapore National Day. Simply fund and name your portfolio with this promo code before the deadline to enjoy a 50% fee waiver for 3 months. For existing clients who already created and funded their SRS portfolios before the 22nd July 2024, you will automatically receive an early bird discount of 50% off the portfolio advisory fee for 3 months. No promo code is required. Now, getting onto our Ask Me Anything Q&A segment, please click the Q&A button and type any question that you may have. Tai Zhi, Jalissa, and myself will address the questions in the sequence that we receive them. Okay, so here we have the first question. If I had invested my SRS money, what happens at the end of the 10th year? Do I have to liquidate all my investment? So to answer your question, at the end of the 10th year, if you did not start withdrawing your SRS funds, your account will have been deemed to be closed at the end of the withdrawal period. So what happens is your entire SRS funds will be liquidated in a lump sum, and only 50% of this would be taxable at your personal income tax rate. The second question is, can you link your SRS account to multiple brands? Example, Endowers, AutoWealth, etc. So the answer is, you can only have one SRS account, either from DBS, OCBC, or UOB. However, you can link your SRS account to multiple brands to invest. Okay, so this question by Mr. Chin Chi Hon, I may have missed this, and is asking regarding the risk appetite. Could we change the risk appetite for our SRS portfolios from risk 4 to risk 3, for example? Perhaps this question, Jalisa can answer.
Okay, the answer is yes, you can change your risk level anytime through the app. So you can change it from risk 4 to risk 3. You can also change it to risk 3 to risk 4. There's no limitations on that, and there's no additional fee involved as well.
Okay, so the next question, how do you select the investments included in your SRS portfolio? So with regards to this, I will direct the question to Tai Zhi.
Yeah, so as I have shared earlier on, you can only invest in SRS approved investment options. So there is a limited universe as to what kind of investment instruments you can invest SRS funds onto. So within that limited universe, we carry out our portfolio selection, right? And as I have shared earlier, it's a very rigorous process. We usually start off with an investment strategy in mind. We want to make sure that the portfolio is well diversified across multiple assets if possible, stocks and bonds, and across multiple geographical regions, all the major geographical regions as far as possible, right? Within each one of these portfolio constituents, we want to choose the best. So we literally look at the entire universe of SRS approved funds and then selecting the best possible fund to fit into the portfolio. And when we look at all these funds, we not only just look at the returns, we look at the reputation of the fund manager, the consistency of returns, how they manage risks, how they perform through different risk scenarios, right? So there are many different criteria that goes into this rigorous selection process. Yeah, Hongwei, we can have the next question.
Okay, so the next question is, how much is the portfolio advisory fee and how much the bank will charge the SRS account, let's say maximize the SRS top annual? So as mentioned earlier, the SRS portfolio advisory fee is 0.4%. And depending on the respective bank operators that you engage, such as DBS, OCBC, or UOB, respectively, they have their own set of fees and charges that you can take a look. So the next question is, must we commit to the initial contribution amount, example, $1,000 per month till the age of 63? So to answer this question, to put it simply, you don't have to stick to $1,000 per month. It is depending on your individual financial situation and financial goals. You have the flexibility to contribute based on how much your individual cap has. For Singaporeans, as covered earlier, is 15,300, and for foreigners, it's 35,700. So you can have the flexibility to contribute the correct amount that you desire. So there's this question on the 10 years timeline. Does it mean that we can only put our SRS investment for 10 years only? So I think to clarify, you can actually continue contributing your SRS funds even when you hit the statutory retirement age of 63. You can continue contributing to your account. However, once you make your first withdrawal from the statutory age, you are no longer able to contribute to your account. So, so to put it simply, if you want to continue contributing to your SRS account, you can delay making your first statutory retirement age withdrawal.
Okay, I see this particular question. I currently have SRS with Endowus, thinking of moving over to AutoWealth, but what are some factors to consider on whether to do so? So when you look at any investment, quite obviously you want to be very diligent, look at the fact sheet, what is the investment strategy that this fund management company employs. If you are already invested, do track how it has performed over time, especially over different market scenarios. For example, in the year 2022, markets were poor. So it's quite likely that you may end up with losses during that particular year. But in the year 2023, when the markets have started anticipating the Federal Reserve rate cuts, and markets have started moving in tandem with that, you should be seeing double-digit returns. If you're not, perhaps you have selected the wrong portfolio or the wrong fund management firm. So these are some factors that you should consider. And also, of course, the reputation and the track record of the fund management firm.
Okay, the next question. For the 50% off portfolio funding promotion for accounts that have already been opened and funded, will these accounts be auto-applicable? So, Jalisa, you might want to answer this question.
Okay, so for this question, right, for the 50% off portfolio funding promos for account. Okay, so for accounts that has already been funded before the webinar date, before 22nd July, you do not have to do anything. The promotion will be automatically applied to your portfolio. So everyone will get 50% off the portfolio advisory fees for 3 months. For clients that started even earlier during the soft launch period, we have also given you a special discount as well. However, do note that all of these promotions are not stackable, so you can only use one promotion at a time. And then for clients that are going to create an account and fund a portfolio today, right, remember to input the SRS promo code, okay, so that we will apply that the promotion to your account. Yes, so the promo code here is NSRS 50% off.
Okay, I see this question by a anonymous attendee asking, can you explain the risk management strategies that you employ within the portfolio? I think first of all, from a design point of view, we make sure that the portfolio is diversified robustly across asset classes, as I mentioned, stocks and bonds, if possible, and across major geographical regions, US, Europe, Asia Pacific, and emerging markets, depending on your risk appetite. So that's from the design point of view. And when we start this investment, right, markets will move, in ways that will catch you unaware. Sometimes, US stocks may be the one leading the pack. Other days, you may see some other regions leading the pack, right? Today, we see the US election, casting some uncertainty and volatility into the market. So actually, US is the one underperforming, whereas you look at China over the last 2 weeks have been doing quite well. So how do we manage this risk, right? First of all, I've mentioned earlier on, that is the portfolio rebalancing process. Every single day, we will analyze the portfolio and look out for portfolio drift, right? So in the case, let's say, for example, the last 2 weeks, if China continues to rally hard enough, right, and starts to have a very huge overweight, more than 3% deviation from the target weights, then we will be selling China, take some profits, and then moving the funds to buy US stocks, whilst it is now discounted, right? So actually what we are trying to do here is to rebalance your portfolio back to the original target asset allocation. But in effect, what we are also doing is we are selling high and buying low, thereby exploiting this market volatility to earn extra returns for you, right? So it's both a risk management process, and it also a performance enhancement process.
Okay, so we have this question. Must I liquidate a SRS investment with AutoWealth within 10 years? What happens if it is a down market? So to answer your question, within this 10 years withdrawal period, all your funds in your SRS account will be deemed withdrawn. So by the end of the 10-year, it will be withdrawn. But perhaps maybe on the question regarding the down market, maybe Tai Zhi can provide some comments.
Sorry, what was the question about the down market again?
So anonymous attendee has asked whether what happens during a down market, can he or she liquidate their SRS funds with AutoWealth within these 10 years?
Yes, so you can actually make a fund deposit or withdrawal any point of time. It's your choice, right? Because it's your money. Although I will add that when markets are down, ideally you don't want to be selling, right? You want to be buying when there's a market discount, right? Unless this is going to be a very prolonged market crisis and you are early into this crisis, then maybe it makes sense. But the better thing to do is perhaps to tactically change your risk level, right? Because ultimately, any market crisis will eventually turn the tide and starts going up. Take, for example, the COVID pandemic crisis sell-off, which happened in January and February of 2020. That crisis, everybody thought is, the pandemic is here to stay and the effects are going to be very lasting. But what we see from the markets is that, by within the next 3 months, actually market starts turning. And when it turns very sharply and very fast, right? So if you start liquidating, and when markets are down, the next thing you know, it starts rallying up very fast and furious and you miss the boat to get back to your investments again. So I would not recommend people to fully liquidate their portfolio just to avoid a market crisis, because you never know when it will turn, right? And bear in mind, when you invest, you are actually investing for the long run, right? You need to go through market crisis, you need to navigate them, right? And give your portfolio enough time for it to recover and then make you good returns over time, right? So it's really about time in the market and not trying to time the markets, unless you're people like George Soros, then I have nothing to say there.
Okay, the next question. I'm confused on the 10-year investment period limit. Is there an age that is recommended to start this 10-year investment period? Perhaps Jalissa can answer this.
Yes, okay. Okay, so for the 10-year, it's not a 10-year investment period limit, it's a 10-year withdrawal period limit. So that means that once you hit your statutory retirement age, right, for example, 63, you only have 10 years to withdraw your fund. So you have to withdraw your fund by the time you reach 73. So
but I'll also add that you are not compelled to start your withdrawals at age 63. It's your choice. If you start to withdraw, let's say at age 70, then the 10-year clock starts at age 70. So you have all the way until age 80 to complete your withdrawals. Okay, I saw another question. I have SRS funds with another robo. Do I need to withdraw from there and fund AutoWealth, or is there any other automatic option? So yes, you have to either withdraw from your existing SRS investments to fund AutoWealth if you wish to, or if you have made a new contribution, you can use those contributions to fund your AutoWealth SRS portfolio. So it's really your choice. Okay, next question. I see how to strategize between starter account risk level 4 versus SRS risk level 4. Is liquidity the only issue? So I think this question is really asking about the differences between the starter portfolio risk for like, and the SRS portfolio risk for like. Now, the risk level is generally about the same. At risk for, what you will be seeing is a 80% allocation to stocks, 20% allocation to bonds, right? The subtle differences here is that, first of all, our AutoWealth starter portfolio has no restriction at all. So we can look at the entire universe of exchange traded funds and mutual funds across the world. We are talking about 14,000 possible investment instruments to select from, right? Whereas in the SRS universe, we have a much more narrower universe to select from, right? So therefore, that's the very fundamental differences here. And because of that difference, I will also say that for the bond allocation, right, you will see that in the starter portfolio, we prefer to use government bonds. So we only use a US government bond ETF and also another international excluding US government bond ETF, right? But in the case of the SRS portfolios, because of the limitation of the universe, what we have selected, therefore, is a short duration and a medium duration bond fund. So two of them.
So the next question is the SRS contribution monthly or annually? Which frequency is recommended? So as we have stated earlier, for SRS, we have an annual contribution cap at $15.3 thousand for Singaporeans and PR, and 35,700 for foreigners. The amount that you want to contribute and the frequency is solely dependent on your individual financial goals and circumstances.
Yes, and I think this question is also quite similar to another question. Is it better to lump sum or dollar cost average in the long run, right? So obviously in the SRS settings, you can contribute 15,300 one lump sum and then decide to invest it one lump sum. Vis-a-vis, then spreading it out, maybe $1,000 plus per month, right? Generally speaking, what we advise our clients is to start as early as possible, because generally the probability of markets going up is higher than the probability of markets going down. So you want to invest a sizable amount as early as possible, right? But at the same time, we also want to avoid the risk, that today, once you start investing, tomorrow, for all you know, there's a market risk event. Today it could be, Biden dropping out, and then now the Democrat camp, hasn't really got to terms with who is the next candidate. So there's market uncertainty here. So that's something that you want to avoid, right? So therefore, you need to strike a balance. Most of the time, what we recommend is to invest 40% of what you have upfront, and then the remaining 60%, do a dollar cost average every month, 10%. So within 6 months, you will have fully deployed all your funds, right? So this way, you get a good balance of both. You are starting with a meaningful amount, to benefit from the probability of markets going up. At the same time, you have 60%, which you dollar cost average over 6 months, to avoid, in case that 40% happens to meet with a risk adverse event, you still have 60%, to take advantage of discounted prices.
So the next question is this 0.4% fee included the fund charges? So Julissa, would you want to take on this question?
Okay, so the 0.4% does not include the fund charges. So for the fund, the expense ratio ranges from 0.6% to about 1.75%. So for interested clients, you can approach your wealth managers for our fact sheet. Yeah, so and this expense ratio are actually deducted by the fund providers directly from the fund value and already reflected in the fund price. But the expense ratio ranges from 0.6 to 1.75, and it's excluded from the 0.4%. So 0.4% is charged by AutoWealth.
Okay, I see a next question. Would you recommend investing excess cash through the usual AutoWealth offering? I presume that's the starter and AutoWealth Plus offering, or SRS. If we had to choose one due to budget constraints. So I think that first of all, it really depends on what kind of profile you're in, right? The best way is to speak with our wealth managers who can, understand your financial situation better and be able to advise you much better. But just generally speaking, right, if you belong to the high income earners where you're paying a lot of taxes, then perhaps you want to start off with the SRS portfolio, because that allows you to reduce and optimize your taxes. At the same time, you can use those funds to invest and get a good return over time, right? So that's very generic without going into greater detail on your financial circumstances. Okay, next question. Have you done peer analysis versus other providers? What would your competitive edge be? I think most people who have their experience with AutoWealth over a period of time would know that, first of all, the thing that sticks out for us is our wealth managers, right? You will often see that comment that our wealth managers are only one WhatsApp away, right? So they are there to handhold you, because we know not many investors have the knowledge and also have the time to manage their investments, right? Second of all, I think we are known for our consistency of returns, right? We have been through a couple of market crises before. We have been through, for example, the trade war 2016. We have also been through the COVID pandemic sell-off. We have also been through the aggressive central bank rate hikes, right? So during these risk events, you tend to find that our AutoWealth portfolios do not decline as much as other competitors, right? And this is because of the way how we construct our portfolios. Risk management is the top of our mind, which is why you will notice that in our AutoWealth starter portfolios, we only use government bonds and nothing else. Because in a very bad crisis like your 2008, even the best, strongest bank bonds will also decline. The only thing that goes up is government bonds, right? So from the portfolio construction point of view, we are risk management is really the top of our priority, and you see that manifesting in the actual investment performance during risk events, right? And when markets are good, quite obviously, we also give a good performance. I have shared the SRS portfolio that was the first SRS portfolio that was started in December last year, right? So just over a period of 7 months, we did a return of 18.3%, right? And this is not annualized, this is 7 months returns.
Okay, so there's this question regarding the SRS portfolio risk score and normal AW risk score. Is it the same set of stocks and weight? Jalisa, would you mind answering this question?
Okay, so again, SRS portfolio and our normal AutoWealth starter portfolio are a bit different. AutoWealth starter invests in ETF, and for SRS, we are investing in mutual funds. So they are technically different investment instruments. The investment strategy is the same. It's going to be a globally diversified portfolio. So it's going to cover it's going to cover investment across the 4 major geographical regions. Your US, Europe, your emerging, and Asia is going to be covered, but the exact fund use will be different. Yeah.
Okay, I saw this question. Can I transfer the SRS amount to the retirement account at age 55, right? So I think not to confuse, SRS is SRS. It has nothing got to do with the CPF account, right? So you can't transfer your SRS to your CPF account, right? The only way you can do is to withdraw your SRS account and then deposit funds to your retirement account, CPF retirement account, if you wish to. But at age 55, that is not the statutory retirement age for SRS. So if you want to withdraw at age 55, you will incur a premature withdrawal penalty, right? So we do not recommend that. Okay, I also see a question. Will AutoWealth assist to come up with annuity options to help us in our withdrawal in future? Yes, we are looking to come up with more and better solutions for our clients. The very fact that we started the SRS portfolios, we are looking at the entire life cycle of our users, right? So we are talking to insurance companies to kind of team up together. In a way, we want to select some of the best annuity options, to offer our clients some selection, which we have already in a way scrutinized and look for the best, right? So this will help them to zoom down to maybe perhaps 2 or 3 options, to do that annuity withdrawals.
Okay, so the next question is, Mr. Ng says that he understands that the funds will be used in various portfolios. How will the fees for the funds affect the performance of the portfolios? Maybe Jalissa, would you want to answer this question?
Okay, so for this question, right, the performance figures on the fact sheet are actually net of returns, so you can actually refer to the fact sheet. So I'll just maybe give you an example. For our risk 5 portfolio, the 10-year annualized is about 12.6% after fees. Yeah, so you can take the figures on the fact sheet as a reference because those are already net of fees.
Yes, and I'll also add that I know many of you are very concerned about fees, right? Quite obviously, you don't want to be paying a fund manager for nothing, right? But when we select funds, when we look at the entire SRS universe, right? Fees is something that we look at, but it's not the most important thing. What is important is really what is the performance of that fund after the fees that they charge. That's how we look at it, right? So a fund can be charging maybe 2 times more than another fund B, but if it can deliver double the performance, I'll be very happy to choose the first fund, right? So that's a simple analogy or comparison that I want to share. So really, while we look at fees, that's not the only thing that we look at. We really want to look at performance after fees. And not just performance, we also want to look at the consistency of performance over time and across market environments.
Sorry, the next question is, to close the SRS investment with AutoWealth, is it just through the app or website? Either of you, Tai Zhi or Jalissa, would you want to comment on this question?
Yes, I think the answer is quite straightforward. If you want to close your SRS investments with AutoWealth, all you need to do is to click a full withdrawal from that portfolio, right? Then what will happen is over the following market days, we will be liquidating the funds and then pushing those funds back to your SRS bank account. So it's as simple as that. Nothing complex here. Okay, I see this question. Is use of SRS a good strategy when compared to direct cash investment? If I anticipate working past the statutory retirement age and drawing an income and attracting taxes. Yes, SRS is a good investment strategy, like I mentioned, you are not only earning returns, but you are also reducing and optimizing your taxes, right? So this is especially true if you are someone who is a high income earner and thereby paying a lot of taxes, right? So SRS is a very, very useful tool for you. For people who are in the middle income level, right? That's also, SRS is also very useful, right? If you remember this slide that Jalisa covered, the percentage of taxes that you can reduce is going to be very significant. In fact, more than 50%, right? So I would say SRS is a very good strategy to not only reduce your taxes, but also to generate you investment returns. Of course, then comes to during the withdrawal stage, right? When you reach the statutory retirement age, we have shared 3 important strategies, how you can optimize your withdrawals. And I think those 3 strategies will be able to cover 90% of the use cases here. Okay, I see another question by Samuel. What's the tax relief difference between CPF SA, the special account top up, versus SRS? Okay, so when you top up your special account, each year you can top up to $8,000 to reduce your taxable income by $8,000, right? For SRS, you can top up, you can contribute. They don't call it top up, they use the word contribute, up to $15,300 for Singaporeans each year. So it is almost about double that of the CPF SA. So that's the difference in the tax relief.
To answer anonymous attendee's question regarding whether this webinar is recorded and whether you can watch it somewhere online. So we will be uploading this recording, this session, and we'll be uploading on our YouTube channel, which is titled AutoWealth.
Yeah, I see this other question by Chin Chi Hon. I'm guessing you will be able to cash out portfolios when we think markets are high. We can return the money back to the SRS and we can go back in, i.e. to say reinvest whenever we choose, right? So the quick answer is yes. You can make a fund deposit to your SRS investment portfolio or withdraw it at any point of time. It will not affect your taxes or anything like that. So your tax relief is only determined by your contribution to the SRS bank account, right, which is 15,300. Subsequently, how much you have accumulated inside the SRS bank account, how much you want to choose to invest and then liquidate to come back is really up to you, right? So it will not affect anything. So you can choose to time it if you want to.
Next question. Can I maintain 2 different risk portfolio in SRS? Jalisa, would you mind answering?
Okay, the quick answer is yes, you can have more than one portfolio in more than one SRS portfolio, and they can be of different risk level. So there's no limitations to the number of SRS portfolios that you can create in AutoWealth.
Okay, I see a question by somebody anonymous. What's the difference between the SRS portfolio, the AutoWealth starter portfolio from a strategy and also investment horizon? He added also, how would you advise to position my portfolio in terms of allocation from a monthly perspective if I have AutoWealth starter, AutoWealth SRS, and AutoWealth Plus? In my mind, and I'm in my mid-30s to achieve a comfortable retirement by 55 years old. Okay, so I think naturally, right, a person should first think about, your investments needs to start off from a comfortable base. What do I mean by that? You need to have a very core portfolio, something that's globally diversified, moderate risk level. So I would think that AutoWealth Starter or AutoWealth SRS will be able to satisfy this foundation, right? As to whether you should start AutoWealth Starter or SRS first, generally speaking, I would prefer to start AutoWealth SRS first because you do derive tax savings, right? When you contribute to SRS, right? So you want to maximize that first, right? Then once you have built this comfortable foundation of your investment or your wealth nest egg, right? You then look at whether you can achieve the financial goals, the basic financial goals that you have in mind. For example, retirement, for example, children's education and things like that, right? Once you are on track to all the basic financial goals that you have, then you start to look at your aspirational ones, right? Some people, they don't just want to retire at whatever age. They want to retire in a certain fashion, right? You want opulence, you want luxury, you know, your normal investment instruments or investment strategies wouldn't get you there when you are moderate risk, right? So you need something that is more high risk, high returns to achieve these aspirational goals. And that's where AutoWealth Plus comes in, right? So AutoWealth Plus is a very thematic, sometimes investment style focus, some are industry focus, and some are team-based focus, right? So generally speaking, the fundamental difference here is that AutoWealth Plus are much more focused and therefore higher risk and higher returns, right? And these are suitable for people who have aspirational ones, right? And I also see that the use case here is to have a comfortable retirement by age 55, right? Not age 65 and not age 63. What this means is that, first of all, you must be disciplined. You need to contribute month on month. You can't expect that when you start a portfolio with $10,000, you know, and you don't make any more contributions that you can reach retirement. That's not going to be possible, right? So you need to be very disciplined every month, contribute some amount to your investments.
Okay, we have this question from Serene Lee. Following the CPF, SA plus SRS, so our total tax relief is 8K plus 15.3K go to 23.3K. So as covered by Jalisa earlier, the total personal tax relief is capped at $80,000 per year. So on top of your SRS contributions, you might have other forms of personal reliefs. And as long as you are able to meet the cap at 80K, you should be fine. Do note that this 15.3K that you highlighted under SRS is the full contribution. And to reiterate, you don't have to contribute 15.3K a year. You can have the flexibility to contribute as much as you want, up to 15.3K.
Yeah, I see this other question, a little bit similar. It's by Mr. Yap Chun Hui or Ms. Yap Chun Hui. Under which tax relief should one claim for SRS contribution? So that's the SRS contribution tax relief, right? So that's $15,300. You don't need to do any action to claim it. The moment that you have contributed to the SRS bank account, whether DBS, UOB, or OCBC, whichever you prefer or choose, that amount will be automatically captured and automatically reported, right? Such that you do not need to claim it, you will automatically be entitled to it, right? So it's quite a hassle-free experience here. Okay, another question is, should we maximize our CPF deposit first or SRS or the other way around? So it really depends, right? If you have already contributed to your CPF, so CPF is a 8,000 relief, right? Voluntary contribution to your CPF SA or your RA, that's 8,000 maximum, right? If you have already contributed that maximum, you should look at contributing to your SRS bank account. Speaking, maybe I share my real life experience. What I'll do is at the start of every year, I will start making my contribution to CPF. Okay, that voluntary $8,000 contribution. Right. Once I have maxed out that $8,000, then I start to contribute to my SRS. Right. Either way, whether I start SRS first or CPF, I am sure that by the mid-year, I've contributed to both. That's what I hope to achieve and what I have diligently done year on year for the last few years. Yeah, and I will say that the total tax relief is 80,000. That's actually quite a lot, right? When you contribute the two, CPF and SRS, that's only like 23,000 plus. If you include your own employee CPF contribution into the mix, and then if you are, for example, an NS man, you have served national service, you also get some tax relief. Actually, in total, all you add up, unless the biggest tax relief contribution, tax relief that you can earn, right, is by having more kids, right? As our former prime minister and now the new prime minister keeps saying, our Singapore population is dwindling, so please try to have children. There is a lot of tax relief for having children. So that's really the big chunk here. But if you don't have that, it's very hard to hit the $80,000 limit unless you make very huge donations, which not everyone does. Yeah.
Okay, we have one last question, which is by anonymous attendee. When is your CPF investment coming up? So perhaps Tai Zhi, would you want to comment on this?
Yes, so we have been in conversation with the CPF board for I don't know, how long was it since we last said that we wanted to do CPF. So the conversation are still ongoing. I think the CPF board does want to have good alternatives and a good mixture of vendors, to offer different solutions to the market. So I am hopeful that we should have something up in the market in the next few months, within this year. I saw this other question just pop out. How can I find my SRS account number? Okay, so basically you just go to your online banking, right? Whichever bank that you use, just log in and then search for your SRS account, right? Usually it will also show the account number there. So that's the account number that you need to input when you are creating the SRS portfolio for the very first time. Once you have started the first SRS portfolio, then you don't need to do anything else, right? The next SRS portfolio is automatic, already linked up properly.
Okay, so thank you all for attending this webinar. So we will conclude the end of our Q&A segment. And to add on, actually right now the statutory retirement age is 63, but there are plans that the government will want to increase this age up to 65 by 2030. So it is important to start investing and creating an SRS account to lock in the early statutory retirement age, as any changes in the future will not affect your current age that you have locked in. So as what Tai Zhi and Jalisa has covered earlier, it is very important to start investing in SRS, and you can do so with the help of AutoWealth. Thank you very much for attending this webinar, and we will see you guys in the future. Thank you.